Hello and welcome to Moneycorp Sterling Foreign Exchange Update. My name's Adam Chester, and over the next 15 to 20 minutes or so, I'm going to try and make some sense of what has been an extraordinary few weeks in Parliament and developments on the Brexit front. I'm also going to look in particular at the implications for the pound, which has clearly benefited over the last few days from growing hopes that Brexit risk is fading. So without further ado, just a quick recap on what's been happening since mid-January, when the PM lost a so-called meaningful vote on a Brexit deal by a majority of 230, the biggest defeat a government has faced since 1924. She did, though, of course, win the confidence vote the day later, basically providing her with some element of stability, and of course that provides the government with a backdrop to push through on its Brexit plans. Shortly after losing the confidence vote on the meaningful deal, the Prime Minister put forward her so-called Plan B, identifying three key changes that she felt were necessary in order to get sufficient support through Parliament. Firstly, a recognition that she needed to engage Parliament more fully, one of the key criticisms that she hadn't been engaging nearly enough over the previous year or so. To embody stronger worker and environmental rights, clearly a key priority of the Labour Party, which is insisting that actually any deal that we strike should have that in it as well. And of course, third and perhaps most controversially, improving the backstop. That seems to be the real sticking point, exactly the relationship between Northern Ireland and Southern Ireland, and the commitment that there'll be no permanent border between those two regions. 29th of January, we had the Brady Amendment was passed, effectively giving the Prime Minister the authority, the parliamentary authority, to renegotiate backstop with an alternative arrangement. And of course, after that, the PM came out and basically said that any second meaningful vote was likely to be held on the 26th of February, and that negotiations with the EU were ongoing. It all started to unravel, though, about a week or so ago, when it's quite clear that progress possibly wasn't as strong or as great as was hoped. 7 Labour MPs, of course, resigned to form the new independence group, concerned about the so-called anti-Semite problems in the Labour Party, and also conviction that actually they wanted a second referendum, and they didn't feel that actually the Labour Party were necessarily representing their interests. And 3 Conservative MPs effectively resigned the following couple of days to join the independence group, effectively reducing the government's nominal majority to just 7, which of course includes the support of the so-called 10 Ulster Unionist MPs. And that of course culminated over the last week with the PM basically compromising, saying that a second meaningful vote will now be held by 12th of March. She wasn't in a position to do that on the 26th. Labour also coming out to say if it couldn't get its Brexit plan through, which basically their Brexit plan embodied the idea of being part of a customs union and closer ties to the single market. If they couldn't get that through, then they would support a second referendum. And it's quite clear in the amendments tabled yesterday in Parliament that isn't the case. Effectively, Labour's key policy, formal policy now on Brexit is that they would support a second referendum. And last but not least, the PM says, of course, if a deal doesn't pass on the 12th of March, she's relented to try and keep stability within her own cabinet and indeed on the backbenches. She is going to allow Parliament to have a vote on whether or not it should delay Brexit. So what happens now? Well, of course, 12th of March, or by the 12th of March, is now the key date in the market's mind. Over the next couple of weeks, the PM, no doubt, will try and continue to negotiate with the European Union, attempt to stem any backbench revolt, try and basically drum up support within the backbenchers, the so-called European Research Group, which amounts to about 70 or 80 MPs who were in favour of a harder Brexit, to try and get them on board to support her deal. Parliament will hold a second meaningful vote, as she said, on the 12th of March. If that deal were to pass and she were able to get the necessary support from her backbenchers and possibly some other party support as well, then of course it's game over. The UK would enter the transition period on the 30th of March, as laid out in the PM's withdrawal agreement, and effectively we would undergo a relatively smooth exit as laid out in the withdrawal agreement and the political declaration. If it doesn't pass, Parliament will then be offered a vote on whether to leave the European Union without a deal. And if it votes to leave with no deal, I think highly unlikely, then of course the UK would exit the European Union on the 29th of March with no deal, and of course all the potential chaos that would ensue as a result of that. If, though, that they vote against leaving without an agreement on the 29th of March, they'll be given another vote on the 14th of March, basically whether to extend Article 50. And of course, almost certainly they will vote to do so because they'll need time to try and negotiate a new deal which would get cross-party support. The Prime Minister, though, has been insistent that any extension of Article 50 will be for a short and limited period only. That's partly because she doesn't want these negotiations to drag on, and also for logistical reasons. European parliamentary elections are due in May. It'd be very difficult for the UK to extend Article 50 significantly beyond those without having parliamentary elections for the European Union in the UK itself. And I think that would be very politically difficult given that we're leaving. So between the 14th and the 29th of March, if Parliament does decide to extend Article 50, then of course it's not only Parliament needs to agree that, we need to get approval from the European Union as well. A revised Brexit deadline would then be set, most likely early June, judging from what the Prime Minister is saying. And then between 29th of March and June, the government will continue to negotiate with the European Union and try to find some compromise. And then it gets interesting because the expectation is that some sort of deal would be struck. But of course, if Parliament can't agree on any subsequent negotiations between the 29th of March and June, then of course the prospect of a second referendum, I think, becomes a very real possibility. The options then available: second referendum on a Brexit deal, and the Labour have indicated that the ballot paper is only going to ask the question, do you accept the Brexit deal or remain? It would not have, under their policy, a hard Brexit question, i.e. leave with no deal. Brexit deadline, of course, could be extended again, and there is some suggestions that the European Union, the European Council, would like the Brexit deadline extended for possibly a couple of years, basically for a bit of breathing space to go back to the drawing board and just see if the UK can come up with something more solid, which will get cross-party support. Also raises the prospect, of course, the UK could leave with no deal. General election, a possibility, but highly unlikely. And of course, all of that would then spell chaos, not only for the UK economy potentially, but also for the pound. So what are the economic impacts of various alternative Brexit outcomes? Because I think this is central now to the Brexit debate, and I think underscores why the Prime Minister is so keen to push her deal through. The government published forecasts on what the economic impact of different Brexit scenarios would be back in November 2018. And this chart here shows in the pink columns the range of outcomes under various deals. So, for example, there is no set key sort of accurate number. So the forecast is presented as a range. So, for example, if the UK were to leave the European Union under no deal, the potential hit to the UK's economy, as measured by gross domestic product, would be around -6.3 to -9% under no deal, according to the government forecast. The central estimate, which is shown by that line, is about -7.7. So clearly, under the government forecast, and I think most economists' forecasts would agree with this, that no deal would represent the worst economic outcome, if only because of the immediate implications or problems for free trade and the bottlenecks potentially that would ensue. Under the PM's Brexit deal, there is still a negative hit to GDP relative to current arrangements, and this forecast is all relative to what we have at the moment. So if we do go through with the PM's Brexit deal, there would still be a hit to GDP in the region of about sort of 1 to 1.3%. The central expectation down about 0.5 there, again shown by the line. So clearly that is the least bad option as presented by 4 different versions of Brexit that could materialise. No deal, the PM's Brexit deal, and the 2 in the middle, some sort of standard free trade agreement, if you like, the Canada type deal, and the other one that's been touted, the EEA type deal, which is Norway Plus, which effectively means the UK retains effective membership to the single market, but not a member of the customs union, so we still have ability to engage in free trade agreements with third parties. But I think this does spell out just the importance for the government in getting some sort of soft Brexit deal through. And I think it also explains why the market has reacted how it has recently. Clearly, the expectations are growing, effectively, that the UK will leave Brexit under the PM's Brexit deal, or possibly it won't leave at all. And of course, those are the 2 most benign outcomes in terms of the economy and most likely in terms of the pound as well. So what does the public think should happen next? There's been a whole raft of polls over the last few weeks asking that exact question. Delta Poll published one on the 23rd of February. And the question they asked is, if the UK is to leave the EU on the 29th of March, what do you think should happen next? Well, it's interesting, just a range of different responses and no clear indication, no clear majority for one or the other. It's quite interesting if you look at this poll, there's relatively little support for the Prime Minister's deal. Just 15% of those are supporting the PM's deal. The other answers, PM should go back to the drawing board, 13%, delay Article 50 as long as necessary to get an acceptable deal, just 8%. So some of the key parts of government policy do not seem to have broad-based support across the electorate at the moment. 21% of those asked basically felt we shouldn't make any more concessions and we should leave without a deal if necessary. But of course, the one at the top garnered the most support. Effectively, Brexit should be abandoned altogether now, and there does seem to be some sense that view is gaining ground. It's quite interesting. In January, we had what's called Brexit crossover day, which purely based on demographics was the day when effectively, had they held the referendum then the aging population, people dropping off at the top and people who are young becoming of voting age, effectively, judging by the demographic trends in June 2016 referendum, if those demographic trends had evolved over the next couple of years, effectively the UK would have voted to remain within the European Union and not to have left. So clearly there has been a shift in that direction. The other poll, YouGov poll on 22nd, 23rd of February, if there was a general election tomorrow, which party would you vote for? There's clearly been some key changes in political support across parties, not least because of the resignations of the Labour MPs. Labour has been hit hard in the polls. If you look at the overall support for the Labours and Conservatives at the moment, Conservatives currently are sitting on about 40% of popular support. Labour's popular support has dropped to about 30%. So effectively, Conservatives are around 10 points ahead in the polls. That question doesn't include the hypothetical question, if you're allowed to vote for the newly formed independent group, how would the results change? Well, if you look what happens then, Conservative support drops slightly to 36, but Labour gets particularly hit hard. Just 23% of those asked would vote for Labour. The independent group, if they were to field enough MPs, would garner support of 18% of the electorate. So clearly there has been a key split. And I think this speaks to the reticence, I think, for a general election here. Very difficult to see how Labour would now support a general election, given that the Conservatives are now seeing the biggest lead in the polls this Parliament. Ironically, I think if there were to be a general election, it could only really take place under two ways. You get backbench MPs within the Conservative Party defecting to, not defecting to Labour, but supporting Labour in a no confidence vote. Or indeed, and I wouldn't necessarily totally rule this out, if nothing emerges over the next few months and things remain at stalemate, the Prime Minister could herself try and call a vote, not a vote of no confidence, but effectively a motion to support another general election. She'd need 2/3 support of the House of Parliament, but if she got that, she herself could effectively try and generate an election to try and build a bigger majority in Parliament so she can push through her deal. But I think at the moment, what this suggests is actually there's very little appetite for another general election. Labour, I think, not surprisingly, would not countenance that as it stands at the moment. Does the public support another referendum? Looking at these polls, 23rd of February, Delta poll, would you support or oppose a second referendum on EU membership, which of course is now official Labour policy? Well, it's closely run thing. Support's running about 42-43%, but the percentages that oppose a referendum are still slightly ahead, around 44%. So clearly the public is split pretty much down the middle on whether or not we should have another referendum. Assuming one were held, and the question was accept the PM's Brexit deal or remain in the European Union, what would the results of that likely show? Well, according to this particular poll by Opinion on 15th of February, 35% would support the PM's Brexit deal under that scenario. But strikingly, about 45% would vote to remain within the European Union. And again, it speaks to the idea that I think the landscape is shifting, that more people, I think, are coming around to the view that maybe, just maybe, remaining in the EU may be the best option. And lastly, if there were another referendum on the UK's EU membership, how would you vote? Again, echoing the results of the Opinion survey, the Remain vote marginally ahead, about 45% versus about 40% for those voting to leave. So clearly the landscape has shifted. And of course, that's also been reflected in bookmaker odds, trying to get a sense of what the market thinks in terms of the Brexit deal. Brexit debate is very difficult just looking at the pound or looking at equity markets or bond markets. Possibly a cleaner measure is exactly what the odds on different outcomes being quoted by the bookmakers are. And this shows effectively bookmaker odds, which we've translated into probabilities, that the UK leaves the EU with no Brexit deal before the 1st of April 2019. And it's quite striking that probability dropped steadily between September and early in the new year. The expectation there was that no deal was becoming increasingly unlikely. Picked up a little bit over the last month, but over the past week, as you can see, that probability has plummeted again. Markets seeing the prospect of no deal is pretty much a non-starter, less than 18% chance. And that, of course, is why the pound has been holding up as well as it has been. We've seen over the past week the pound performing particularly well. It's hit a 21-month high against the euro, and it's hit highs back 3 or 4 week highs against the US dollar. In fact, it's tipped slightly above that recently. And again, that speaks to the idea that the markets do not see the prospect of a hard landing or hard Brexit or no deal as a serious possibility now. Instead, I think the two key outcomes are likely to be either, the Prime Minister will get sufficient support for a Brexit deal on the 12th of March. There are some signs that the European Research Group and even the DUP is recognising that actually they may have to vote for that deal to prevent a hard exit. And if that happens, or indeed we have a second referendum at some point, in which case, as the recent poll suggested, there's quite a high possibility that actually the public would vote to stay within the European Union. The other key issue, of course, affecting this debate is the UK economy. And against the backdrop of all this uncertainty, what we're seeing at the moment is the UK economy is slowing. GDP growth in 2018 rose by just 1.4% in the UK. That was the weakest rate of growth we've had since 2009. The Bank of England and Mark Carney, the Governor of the Bank of England, were appearing before the Treasury Select Committee earlier this week, talking about Brexit risks and the hit to the UK economy were we to go out with no deal, and also making the point that actually if this uncertainty continues indefinitely, the Bank of England stands ready to provide monetary support to try and underpin the UK economy. And I think this is one thing which is also playing into the foreign exchange debate at the moment. While the market has clearly taken some solace from the fact that no deal is looking increasingly unlikely, the other key dimension to this debate is how the UK economy is performing, what is likely to happen to UK interest rates over the next few months and quarters. And at the moment, the market doesn't see any realistic prospect of a rise in UK interest rates until 2020, late 2020 at the earliest, given all the uncertainty and the slowdown in the economy that we're seeing. Having said all that, the Eurozone is also slowing, and I think this partly explains why the pound is having a relatively good performance against the euro at the moment. The US economy is doing relatively well, certainly a lot better than many people had anticipated, particularly given the recent budget gridlock and the closure of government. But the Federal Reserve in the US is also talking about the need for patience. So the rate debate in the US is also shifting. So I guess the key point to bear in mind here, the pound is going to move over the next few weeks and months, not just on how the Brexit debate unfolds, but also how the relative policy debate unfolds. And on balance, I suspect that actually the UK may be later to raise interest rates than possibly the US, which would argue against, I think, any serious recovery in the pound, at least on economic grounds, over the next few weeks, months and quarters. Is the market being complacent? Quite possibly so. Yes, the single most likely outcome now is possibly the Prime Minister's Brexit deal gets voted in, or we stay within the European Union and Article 50 gets delayed. But there are still substantial tail risks. This chart shows what's called 1 month implied volatility. Effectively, it's a measure of how the markets think the pound will trade, or how volatile the markets think the pound will be over the next month. As you can see, at the time of the referendum, we saw a big spike in June 2016 when we voted to leave the European Union. We haven't seen anything like that sort of increase in implied volatility over the last few quarters. And yes, you can argue that probably is justified given the debate has shifted. But of course, until this debate is settled, there is still a significant chance of a tail risk outcome, a general election, no deal, hard exit, call it what you will. So to wrap up, I still think there's plenty of scope for currency volatility over the coming weeks and months as the Brexit debate continues to move to and fro. The other key thing to consider, of course, is the slowdown in the UK economy at the moment, Bank of England on hold. But I also recognise, of course, the EU and the US have their own problems. So you need to look at the relative dynamics of how the US and the EU are performing relative to the UK and how that shapes the UK economic and interest rate debate. Effectively, taking no deal off the table limits the PM's bargaining power with the EU to secure any major concessions from here. But she's probably done enough. And I suspect what she's done by having a vote on March the 12th could well be enough just to force the hardline Brexiteers in her own party to back her deal and just get it through. If not, of course, extension of Article 50 will extend that uncertainty by a few months, also leave open the possibility of a second referendum. But the problem with that, of course, it's very difficult to reach agreement on what the question should be, and also highly divisive, given we've already had one referendum already. Going back to the country on this, I think could cause significant political problems. Fractures exposed by the recent party splits could be more enduring. General election could happen if the European Research Group abstain in any confidence vote. And as I said earlier, if all else fails, the PM could try and force one herself if she felt that was really the only option she had left. But in conclusion, I think an amended PM deal, stay in the EU, are now the most likely outcomes from what's happened over the past week. This should be positive for the UK asset markets and for the pound, but clearly we've already started to see the pound reacting over the past week. I suspect it could continue to improve, but limited upside, I suspect, until the outcome is absolutely settled. So thank you very much for listening to me. I hope that's provided some food for thought, and I look forward to seeing how the pound performs and how this Brexit debate is resolved on March the 12th. Thank you.